Okay, so I'm Jeanette,
I'm Mike. Stock. I'm Kevin Bourget.
and this is our case analysis.
Okay. So just a little background on this couple. Raj and Nikita Patel are a married couple with 2 young children. Raj works in manufacturing and is not attending college, but he does, however, have a high school degree. Nikita has attended community college and is a receptionist at a local accounting firm. Nikita has, Raj makes $44,000. Nikita makes $24,000, which totals their annual income of $68,000. So their weaknesses outweigh their strengths. The Patels feel social pressure to compete with the lifestyles of their neighbors. So they see their neighbors driving fancy cars, having fancy things. They feel like they deserve that lifestyle as well. The peer pressure of their neighbors force the Patels to join the local golf club and swim club as well. These clubs can be very expensive. I know that Raj invested in custom clubs, which are very expensive. Priya's violin is very expensive as well. Raj and Nikita use their credit card to finance the purchase. This wouldn't be such a bad thing if they weren't in so much debt. On one of their credit cards, they reached the credit limit. The family does not have a lot of time to make meals or spend time with the kids. This affects their quality of life. They have reached, I already said they reached their credit limit. They opted to finance the $2,000 couch over a 24-month period, 0% financing. This wouldn't be so bad if they weren't in so much debt. The interest can be a lot. The Patels took out a payday advance loan to pay their car payment. Again, this is a lot of interest. All this accruing interest will set them back with their financial goals. Some of their strengths, their children are young, so the Patels have time to plan for the future, save for their kids' education plan, as well as their retirement. Raj is used to working 50 to 60 hours a week, therefore he's not affected by the recession. From a workload standpoint, he does not have to adjust to the amount of hours he will be working at a secondary job. Nikita is considering becoming a registered tax return preparer. This is also good because it will increase their total income. And essentially, we want to increase their income so they can pay off some of their debt. And we strive to make their lives as easily as possible. Incremental changes, because the typical client would not want to change their current lifestyle.
Okay, one of our recommendations for Raj and Nikita is to pay off their liabilities. They can pay off their car payments within the next 5 years. If Nikita pays $331 per month for her 2010 Volvo, and if Raj pays $370 a month for his 2009 BMW, they will be free of their car payments for 5 years. Next, they should pay off, we recommend they should pay off this $600 payday loan. This has way high interest rate that if they can just pay it off in full, that would be great. They should also pay off the credit card number 2 using the money that they get from selling the custom golf clubs. And they should pay off their credit card 1 balance in 5 years, in a little bit over 5 years, with monthly payments of $390. We recommend that they get new jobs to help increase their income. Nikita can become a registered tax return preparer, and when she does this, she will keep her health insurance. This will increase their annual income from $24,000 to $36,000. Raj can get a job at a local airport as a ramp agent baggage handler. He will work 20 hours a week at a night shift, and he's used to working these hours, so that's not a problem for them.
Just going to go over some recommendations we made regarding retirement and insurance. We suggested that Raj and Nikita try to increase their 401k contributions in an effort to better prepare them for their future. Another recommendation we made was for Raj to increase his term life insurance to $800,000. Previously, he just had term through his employer, which would be terminated when he switches jobs. We also suggested that Raj take out a disability policy with a $4,000 a month benefit, just to protect against the loss of income that could happen if he were able to get disabled. Education. They have 2 young children, and we advised a 529 plan. What's great about the 529 is that anyone can contribute to it, and the growth isn't taxed into the account. And we also talked to Raj and Nikita about an emergency fund. When we first met with them, they really didn't have any savings that could be used in case of an emergency, so we put together a savings plan for them to do that. Our estimates suggest that a family should have about 3 months' worth of expenses put aside in case they ever do need to use that fund. We set a goal for them of reaching this amount in about 5 or 6 years.
We made additional adjustments for Raj and Nikita. We recommended that Raj would sell his custom golf clubs, and this will help pay off the credit card balance. The family should cancel their membership to the country club because the monthly expense is way too much for them for right now. Aziz can still take swimming lessons at the country club because the expense is separate from the monthly expense of the country club. And Kyra will continue to take violin lessons. Nikita did not sell her jewelry because of the emotional attachment that she had to it. It was too hard for her. And the family did not cut back on dining out. Because of the increase in hours that the parents have been working, this was not available for them. They would continue eating out. And Raj and Nikita did not sell their, we didn't recommend for Raj and Nikita to sell their cars because they have already depreciated in value, and the amount of money that they would get for the cars wouldn't outweigh the amount of hassle in the future for fixing broken parts for used cars.
Okay, so we projected Raj and Nikita's budget for the next 5 years. Raj's income is set to increase at a rate of 3% a year, and his wife Nikita's income is going to increase at a rate of 3.5% each year. We estimated that each year's expenses would increase at a rate of 2%, given the fact that inflation for the past 10 years has been around 2% on average. Certain expenses were not set to increase. This includes the credit card and the car payments. We budgeted that premiums for disability insurance and life insurance would increase at a rate of 3% each year. We budgeted that payments towards their emergency fund should increase at a rate of 3% each year. And also payments towards their children's college savings should increase at a rate of 40% each year until 5 years have gone by, and then remain constant thereafter. There will still be money left over in their bank account to spend at their discretion. If they wanted to continue the violin and swimming lessons, they would be able to afford it if they wanted to. It would be best if they held off on rejoining the golf club for about 4 to 5 years. This is because the expenses are still too high for them. After a few years, they'll have enough savings to offset the increased expenses. Within the 6th year, the family will become debt-free, and they will also have their emergency fund. After the family's debt-free, they will notice that their net income is significantly higher. They could use that money to further save for their retirement or provide their children with college savings. They could even take a vacation if they wanted to. At the end of 5 years, they will have saved $80,000 towards their retirement, $12,000 for their children's college saving. They will have saved up enough for an emergency fund, and they will also have a much higher income from then on after. Thank you.